Welcome back to our intermediate financial accounting class. In our last segment, we talked all about the income statement, why it's important, how much people use it, what the limitations are, and why we set it up the way we did. In this segment, we're going to continue our discussion of the income statement, not by any more conceptual stuff, but by starting to actually build an income statement. And that brings us right here to our first example. Now, in order for us to do this, you need a link to our Excel spreadsheet. You'll find it in the description to this video, or if you're taking the class from me, then you'll find it in our course website. On the very first tab, you'll find all of the data that we'll use right now to do an income statement, and later on to build a statement of retained earnings, balance sheet, and finally a statement of cash flow. In the other tabs, you'll find basic templates set up. Not all the detail, just some basics that will help kind of speed us along. All right? Take a minute, if you haven't downloaded it already, to download it now. And if you're going to work by hand, be prepared to stop the video a lot, since we'll move pretty quickly. I'm going to change now from PowerPoint over to Excel. So here I've got a list of account balances. It's not a trial balance for CBDS because that would have a debit and credit column and would have a balance at the end to make sure things were matched up. This is really just an alphabetical list of accounts we can pull from so that we can create our income statement and later on our other financial statements. If you'll move to the next tab here at the income statement, you'll see at the top of your template, assuming that you're following along there, that I've set up the basics of our income statement. The first thing I want to draw your attention to are these three lines up at the top. Every financial statement needs a good form heading. For a trial balance used internally, usually use some kind of a heading as designed by your company, not as crucial. But in an income statement, balance sheet, the formal statements, you definitely need a heading. For an income statement, it always includes the name of the company, the title of the statement, and then the dates. And it's specifically for year ended whenever that year ends, or it could be for quarter ended or month ended. We're going to do everything on an annual basis for our course, but financial statements can be put together for any period of time. That's that periodicity assumption we talked about way back in our first discussion of the conceptual framework. Now once you've got your heading, then you can move on and start putting things together. And you can see that I put in at least a couple of titles here for us so that it's easy to see what we're doing. We're going to start with our revenues, and what we really need to calculate is net revenue. So we need all of the different revenue balances. So I'm going to go back to our raw data tab, and I'm going to find the sales section. And you'll see right here, I have three different accounts that are part of sales. We've got the actual sales revenue account for $2 million. We have sales returns and sales discounts that we need to take into account. Sorry, couldn't have helped that play on words right there. We need to take all of this information and put it together to get our net sales. So we're going to transfer all of this to our income statement. I'll type it out, but feel free to link it in Excel. We may do that once or twice just to show you for those who aren't as familiar with Excel. All right, so in our income statement right here in cell A5, I'm going to type in sales revenue, or try to. There we go. And over in column E, I'm going to link this using the equal sign. I'll go back to my raw data, and right here I'm going to click on that 2 million. And it's kind of hard to see, but right up here at the top in my equation row, you can see that it's linked to that raw data tab. Now I'm not going to keep linking it, I'm just going to type it, but I recommend linking all of your spreadsheets just because it's typically faster, just not when you're trying to present and walk through it in a Camtasia video. So there's my $2 million. Next, I'm going to subtract my sales, oops, need a space there, my sales discounts and my sales returns. Those are my other two sales accounts, and it looks like I need one more space. There we go. That's better. Now they match up. Okay, now again, you can link them if you want to, or you can just type them in. The numbers here, it's 20,000 for sales discounts and 175,000 for sales returns. Now, most of the time, when we do a financial statement, you can see that I've jogged this in. I have all these total numbers here in column E. That's where we put final numbers. Every time we do a calculation, we go out a step. So you can see here in D, I've put these two numbers so that I can do a calculation. I'm going to add them up, and then I'll subtract them from sales to get net sales. So here in E7 is where I'm going to add these two up. So I'm going to type in equals the sum of the 20 and the 175,000. And then once I hit enter, there's my 195, and you can see that I've already got some of the calculations in here. So those of you working along in Excel, you've got these spreadsheets you can use to kind of speed things up. So there's our net sales, and that's what I'm going to label it as over here, net sales revenue. You'll notice that I've done some indentations and moved things around a little bit for you. Again, those of you using the template. A financial statement in good form is very easy to read. It's one of the key ideas when you're doing the income statement. And I should mention right now, doing an income statement in good form is one of our key concepts, because you really do have to follow the basic model that FASB's come up with in order to create an income statement that's acceptable to investors, bankers, SEC, other regulators, etc. It's also easier as an investor if you can look at and know immediately, okay, I'll find this information here and this information there. It's easier for us if we do it that way. Before we move on, I'm going to go back to my raw data, and I'm just going to highlight these. And we're going to use green to show that I've already used them. That way I don't keep coming back to them. Our next section is cost of goods sold. And cost of goods sold, is, if you remember from our discussion in the accounting cycle lecture, is a basic equation. We start with beginning inventory, we add in our net purchases, which is purchases minus returns, minus discounts, minus any purchase allowances. Then we add in freight in. So the sum of those three, the beginning balance of inventory plus net purchases plus freight in, gives us cost of goods available for sale. Once we've got cost of goods available for sale, we subtract ending inventory, and that gives us COGS. Now in this company, you can actually see right here that it's a perpetual inventory company. You can see it because they've given us a cost of goods sold. If it was a periodic inventory system, they wouldn't have a cost of goods sold number. So really, we could just say cost of goods sold and be done. But I think we need to practice at least making this section. So we're going to go ahead and do the full thing, even though technically we don't really need it. So first off, let's get our inventory numbers. So there's our inventory beginning and ending. And we're going to start with beginning, 280,000. So let's go back to our income statement. Cost of goods sold, we're going to start with inventory on December 31st of year 1. And I have a very loud keyboard. Sorry about that. And we're going to put that in right here. It was $280,000. Next, we are going to do our purchases, so we can calculate net purchases. So our purchases number, let's go back to raw data. Here's all of our purchase information. You'll notice I didn't highlight that inventory number and show that it was used, because I still have the ending inventory number to use, and I still have to put them both in the balance sheet. So until then, I haven't really used them completely. So here, though, are my purchase numbers. And I don't really care about last year's number. I just care about this year's numbers. So you can see raw purchases or gross purchases are $1,077,000. And then we have all three. We've got some allowances where they gave us credit for stuff that was damaged, and they gave us an allowance instead of having to ship them back. Better to give it to us at a discount than lose the sale completely. Then they gave us some discounts, our vendors, because we paid for things a little bit more quickly. And finally, we've got some returns, stuff that even with an allowance we weren't willing to keep, and we shipped it back. So I'm going to go ahead and put all three of those numbers in. Again, you're welcome to link them if you'd like, but I'm going to type them in. So I'm going to go back to my income statement, and my purchases number was $1,077,625. Then we're going to subtract our purchase discounts, our purchase returns, and our purchase allowances. If I can type. Now I'm going to put these in as negatives because I'm going to subtract them. So my discounts were $16,163, my returns were $8,995, and my allowances were $14,000. And with that, I can calculate my net purchases. Now, there's a shortcut here if you want to learn it. You can do it this way, like that. You can do it the old-fashioned way, this number plus this number plus this number, etc. Or there's a shortcut. If you go right up here to the top of your screen, there's this Autosum, and Excel will guess at what you want to add up. For those of you who are really good at this, good for you. Just ignore this part, or zip ahead, or think about other ways you can do it, because there's lots in there. For those of you who are new to it, hopefully this is helpful. Anyway, if we hit this Autosum button, Excel will guess, and they'll give me an option, and you can see right here, it's put a highlight around the cells it thinks I want to add up, and I can click on these little blue boxes in the corners and move it up or down if I want to change the sum. Once I've got what I want summed up, then I just hit enter. And there's my net purchases. To my net purchases, I'm going to add my shipping charges. And we don't have that number yet, so I'm going to go back and get it. Alright, here's my purchases. I've used them. Shipping charges, and you can see here that I have two sets of shipping charges or shipping expenses, but you can see that this company has labeled this first one as freight in. So that's the number that I want to use. Shipping expense, even without the label, the shipping expense is typically the selling expense I accrue in order to ship it to my customers. So once you see it labeled as expense, that's typically not the freight cost of getting it to me. It's the cost of sending it out. Anyway, so we're going to use this $16,250, and I'm going to go ahead and mark that as used since we're using it right now. We'll go back to the income statement and we'll put that in, $16,250. Now you have a choice here. You can just add all of this up and get your cost of goods available for sale right down here in this D18 cell. Personally, I like to add things up and see the steps as I go. So I'm going to take this net purchases plus my shipping charges and get, it's not really net purchases because I've added the freight now, and that's not really part of net purchases. It's everything but beginning inventory, I guess would be the best label for it. Alright, and this, once I add that shipping charges to my inventory, I get my cost of goods available for sale. And that's going to be the 280 plus this 1,054. And one of the reasons I put that 1,054,000 in is so that you can easily see this equation. Now I've got cost of goods available for sale. Next step, if you remember our equation, we're going to subtract out our inventory at the end of the year. So this is December 31st, year 2. So we need to go get that number since we haven't had it yet. So I'm going to click on my raw data tab. And here inventory was 280 at the beginning of the year. It's 240 at the end of the year. So that's what I'll subtract out, is the 240. So I'm going to go back to my income statement and I'm going to subtract out 240,000. Hopefully so far so good. If I'm going a little fast, please feel free to pause this as you go. When I've got students in front of me, they can tell me to slow down. I tell you, once I get into Excel, boy, I get excited. As an accountant, it's not quite as good as journal entries, but playing with Excel, it ranks right up there, let me tell you. So assuming you don't need to pause it and go back and catch up, let's keep going. The next thing I'm going to do is calculate my cost of goods sold. And that's going to be this cost of goods available for sale number plus the negative. Since I put the inventory in as a negative, then I can just add it. If you put it in as a positive, you'd subtract it. But there's what I've calculated as cost of goods sold. Now before I go on, I'm going to compare this number to this number. Because I did this equation just for the practice, I didn't really need to. It's a perpetual inventory company, and they have a cost of goods sold number. So I could have just put in that one line item, cost of goods sold, and dropped in this number since I had it. But what would have been the fun of that, right? We would have missed all this excitement. You can see that we did a good job. We got the same number that they did by doing all the journal entries all through the period. So it worked out just perfectly. Since that balances, we can get to our first step in our income statement. So right here, it's calculating it automatically, this 710,283. This is my gross profit. This is a multi-step income statement. Multi-step meaning that I make my calculation of net income in a series of steps. And the very first step was gross profit. Net sales minus cost of goods sold gives me my gross profit. And that's where we're going to stop this segment. When we come back, we'll continue on with our discussion of the income statement. See you in a few minutes.